So good morning, everyone, and thank you very much for taking the time to connect with us today and take part in our What's in the Suite series of webinars covering Oracle NetSuite. If you've missed any of our previous sessions and you'd like to review them, please let us know in the chat and we can organize to send the links to the previous webinars to you at the end of the session. This webinar focuses on Oracle NetSuite from the context of a software and technology business. And we're focusing today on some of the key challenges that our customers come to us with, seeking our assistance to solve. Obviously, this is just an overview. There's plenty of other topics that we could get into. However, the purpose of the time that we have available today, we'll just stick to some of the top issues, and feel free to reach out to us to arrange a more personalized discussion if anything we cover here today resonates with you. So a little bit about how we're going to structure the webinar today. We'll quickly introduce ourselves, tell you a little bit about who Fusion5 is, and give you some context on why we're running this webinar series and where Oracle NetSuite fits into our business. The theme for today's webinar is unlocking and managing growth in your software and technology business. So we do want to focus on the areas of NetSuite that are associated with that. We're focusing today on how NetSuite can help you deal with moving into new markets outside Australia and New Zealand, dealing with entities that have different base currencies, have different tax rules or obligations, but also when dealing with multiple legal entities within Australia and New Zealand, and how we can automatically consolidate the financial reporting of all those entities in real time, regardless of what their base currencies are. We're also going to delve into how NetSuite deals with the complexities of revenue recognition and revenue arrangements, which is especially pertinent to any company that has a legislative requirement to recognize revenue in a fashion that aligns with when it meets its performance obligations in delivering the services and subscriptions or goods that you sell. If you're in the software business or you sell anything that people subscribe to or services that people subscribe to and prepay for, I'm sure this topic will be particularly interesting, as this is very likely to be pertinent to you and may be causing you some issues right now. Next, we'll tackle contract items, that is, items that you sell, which may have contract durations associated with them, and how we can deal with contracts in NetSuite, especially pertinent for subscriptions or SaaS products that you may produce or sell in your company, or if you're a partner reselling other applications that you may partner with. We'll also cover how we can manage those contract terms, the revenue arrangements associated with them, and how you can manage the renewal process. And that ties into our last topic, which is reducing churn. As we know, in the subscription world, net revenue growth is affected by customers who drop off or don't renew their subscriptions. So we really want to make sure that we're managing the process of retaining our subscribers at the back end whilst adding new subscribers at the front end. Otherwise, all we're doing is replacing revenue from our existing subscriber base with new customer revenue if our existing customers aren't renewing. Obviously, no software package is going to make your customers continue to subscribe to your products, but we can help you put in place processes that ensure that we're managing the relationships that we have with our existing customers in a proactive way and making sure that we're having conversations with our client base well ahead of when their renewal is due. Today, we're also delighted to welcome to our conversation with a customer segment, Jared Montgomery, who's the CFO at Blackhawk.io, to discuss his experience with NetSuite and how it's impacted his business. Blackhawk is an extremely cool company based in New Zealand who specialize in building smart IoT-based asset management devices and associated software. And their products are used by a wide range of businesses to get the most out of their most valuable assets. Blackhawk also uses cutting-edge IoT, cellular, and GPS tech to bake some very cool and unique features into their platform. So be sure to discuss this with Gerald if this sounds like something that would assist you. Please ensure also that you pop any questions that you have in the chat as this webinar progresses, as we'll be sure to answer them as we go along. So our panelists today are myself, Joel Mickelson. I'm in Sales and Solutions. I'm based in Brisbane, covering our Oracle NetSuite and Corporate Performance Management products. I've been solutioning Oracle NetSuite now for just over 6 years. We've also got Jess Mason on board today, who's our Senior Partnerships and Marketing Lead for Fusion5's Oracle NetSuite pillar across Australia and New Zealand. And we'd like to extend a huge welcome to Jared Montgomery from Blackhawk.io, who'll be our guest speaker today. We also have Janine Eastwood administering this webinar today, who'll also be managing your questions and follow-ups as we progress. So, who is Fusion5? Some of you may not know us, so a brief introduction to who we are and where we fit into the Oracle NetSuite ecosystem, I think, is appropriate. We're a business applications and innovation company whose goal is to empower our clients to innovate, profit, and grow. To do this, we design solutions utilizing a combination of some of the best tools and platforms on the market, such as Oracle NetSuite. In addition to software applications that we also design and create specifically for the ANZ business, along with other applications and products that we partner with. Supporting our applications business, we also have an innovation and integration pillar who focus on utilizing cutting-edge technology in areas of AI, machine learning, and IoT, as well as supporting our integrations with other platforms. We also have a managed services pillar that supports our clients through their entire technology ecosystem, from desktop environments through to hosting, endpoint security, and help desk. We aim to be a complete technology and applications partner to all of our clients. We've experienced 18 years of growth now. We've got over 500 employees across our 9 offices in Australia and New Zealand, and with over 1,000 customers that we partner with across ANZ. Today, we're focusing on Oracle NetSuite. Fusion5 is the largest NetSuite partner in the JPAC region, and we're honored to be recognized as Partner of the Year for 2021. We're proud to also have been Oracle's JPAC Partner of the Year now for 6 continuous years, and we have the most passionate and experienced NetSuite team in the region. So if you have any questions about Fusion5, our partnerships, or any areas that we can assist your business in, please also just pop them in the chat and we can follow up at the end of this webinar. So moving on to what we're covering today. Starting with the look and feel for the NetSuite UI, we'll discuss One World, how NetSuite's multi-subsidiary and currency management can unlock growth opportunities in new markets that would otherwise be too difficult and complex to trade in. So NetSuite allows companies to support an unlimited number of entities out of the box in the home region, and with the ability to add on additional countries as required. Globally on NetSuite, there are businesses that run in over 208 countries and independently governed territories, meaning that NetSuite is truly a global product, supporting over 30 languages in the core platform, with new translations continuously underway. Every new country you provision in NetSuite comes with its own out-of-the-box localizations around things such as tax schedules, rules, languages, and reports, making global expansion of your products and services very much within the reach. Without those kind of localizations, the sort of market reach into these regions becomes very difficult as you try to comply with local tax laws and requirements. NetSuite also allows you to price your products in multiple currencies, meaning that you can run universal SKUs for all your products and have different country pricing for them, sell them globally, and report on them in a single consolidated platform. We'll cover more of this in our demonstration. So we'll focus on revenue recognition as well, and the principles behind the legislation around this, and why it's important for software companies to manage this effectively in their ERP. As you'll no doubt know, under IFRS 15 and 16 and ASC 606 guidelines, companies can't recognize revenue until such times as certain performance obligations are met in the contracts they have with their clients. We can't simply raise an invoice for a customer for a software agreement for 12 months, take payment for those 12 months, and recognize that revenue upon payment of the invoice straight away. In most cases, we need to defer the recognition of that revenue until such time as performance obligations under that contract are met. For example, if we've got a 12-month SaaS agreement of $1,200 per annum, it might only be reasonable for us to recognize a portion of that revenue as we deliver the software access to our customer every month. So in NetSuite, we may post the revenue to a revenue deferral account, recognize $100 of that revenue every month for 12 months, as opposed to the whole $1,200 up front. So I'm certainly not here to give you accounting advice as a rule of thumb. Companies will normally want to follow the 5 steps of revenue recognition when determining how to apply revenue recognition rules to their accounting systems. In relation to the application of revenue recognition principles, typically we find that software companies and technology companies provide a range of products and services which may include software licenses, installation, and other professional services, again, which may have performance obligations associated with them or post-contract support, future updates and enhancements and additional software licenses and add-ons, etc., all of which are deserving of considering when it's appropriate to recognize the revenue from these products and services. It's not a definitive list, but there are many use cases to consider which may be unique to your business. For example, we have clients who provide hardware as part of their software agreement. Included with this agreement, meaning that a fair value needs to be determined for the goods that are provided, even though they're not actually receiving any consideration for them up front. We've got other clients that provide hardware up front, allowing their customers to pay the product off over the term of agreement. That's an interesting case because the control of the goods transfers to the client when they receive that hardware up front, meaning that we actually need to recognize that revenue for that product despite the fact that we've not actually received it. So all of these use cases we can deal with in NetSuite. So how do we deal with revenue recognition in NetSuite? So revenue recognition's core principles state that revenue should only be recorded when it's earned, not when the related invoice has been posted or the related cash has been collected. Typically the bookings to revenue process involved in a transaction in NetSuite involves the customer signing a contract, an invoice being raised for the subscription and services, and a recognition schedule being applied to the invoice. In NetSuite, it is possible to pre-configure all of these rules and arrangements so that you can just process your transactions normally, add your contract items, and the appropriate schedules are automatically applied to those items and followed without any manual intervention. Sounds good, right? So we'll cover that in this demonstration. Right now, however, I'd like to hand you over to Jess Mason, who'll be having a chat with Jared Montgomery about his experiences with NetSuite. So I'm just going to hand over to Jared now. If you have any questions about anything that we've already just covered, please make sure that you place them in the chat.
Thanks,
Over to you,
Joe,
Jess.
for that. Yeah, thank you so much for that great introduction and rundown. And thank you for also making my job a bit easier in terms of giving a bit of introduction around Blackhawk.io. Gerard, welcome today. Thank you so much for joining us. We're super excited to have you and your drum kit with us. So Joel gave a bit of an overview around your company, but I think our listeners would really like to know about Gerard, the CFO, the person. So just a little bit about yourself and your background before we kick off our conversation.
Yeah, thanks, Jess. Thanks for having me on the webinar. Yeah, just a little bit of background about me. I qualified as a chartered accountant back in 1998. My hard graft early on was with a KPMG affiliate company, and like many people, once I got my chartered accountant status, I decided to go on an OE, and I went over to the UK for 4 years and worked in the investment banking sector over there. Then when I came back to New Zealand in the early 2000s, I worked for a range of companies that were listed companies on either the New Zealand or Australian Stock Exchange, some of those being Westfield, Fletcher Building, Methven, and a tech company called Provenco at the time. And after it's probably about a dozen or so years in that corporate environment, I decided to shift into experimenting with privately owned businesses. So I'd taken quite an interest in technology companies and also New Zealand-owned technology companies, and part of my passion was how to help them grow internationally. So I wanted to kind of get involved in that environment. And also, I guess, within the tech business, you get quite a diversity of culture and people to work with, from software developers to marketing people and business developers. So it's an interesting environment, and every day is different. You know, there's always new challenges when you're trying to grow a tech company. So over the last 7 years, I've worked for a business called InfoTools. They were a market research technology business. Then I got, I guess, the 7-year itch, and it was time for a change, and I moved on to Blackhawk, which is, yeah, it's a cool IoT business all about asset optimization.
Oh, awesome. Okay, so I suppose that's a nice lead into my next question. You've been around in different types of industries and companies, and you've cut your wings a bit. But can you tell us what specific situational issues did you face as a CFO or senior financial leader when you took over this specific role at Blackhawk.io?
Yeah, I guess my first challenge was COVID. I started in the last lockdown, which was the 1st of March. So I had to go into the office and grab a laptop and go home. So that was kind of my first challenge, was just dealing with starting within a new business remotely, and going through an induction process in that way. So it was unique, but it functioned. But also the time when I started, it was being March, the company was commencing a 5-year business plan, and also as part of that, determining the budget for the FY22 year. Also, we had the year-end financials coming up, being a 31 March balance date. So there was a lot going on at that time, and I had to come up to speed quite quickly. So in combination with that, I inherited quite a poorly implemented financial system. There was a lot of manual processes. It was very error prone. There was a lot of use of spreadsheets as opposed to the system itself. So for me, it was quite a frustrating and unproductive process that I had inherited, and it took a good chunk of my time to just get basic data out and complete a month end and assist with data required for budgeting purposes. Also, the business itself, it's reasonably complex. As Joel mentioned, the various types of things that tech companies can get involved in. So it's not just a SaaS software platform. There's hardware devices that we sell. It's hooked up with professional services and implementation services. Also installation of the hardware itself. So there's services in relation to that. And then the company has quite a diverse customer base, from the aviation sector, large airlines, through to finance companies, through to in consumers. So for its size, quite a complex business. And also with our 5-year plan, there was various strategies that the company is looking to execute on. So there's a real thirst for data and data insights to assist with developing those strategies at the executive team level and at board level. So that was another challenge with the system that I had inherited. It was quite difficult to get my hands on the information that I needed to assist management in developing those strategic plans.
Well, you really had your job cut out for you. That's all quite intense. Okay, I just want to remind everybody, if you have any questions, like Joel mentioned, please pop them into the chat, and we'll get to them at the end of Gerard's session. So this was a lot that you obviously had to go through, being a new senior leader and then sort of coming into this organization. But would you say these were like the main drivers on why you decided to move from your previous provider to NetSuite? Could you talk us maybe around that? Where was your headspace at?
Yeah, so along with that frustration, I was quite motivated to put something in place that really worked for the business and represented the finance team within the business. With that existing system that I'd had, it was just difficult to use. It was not intuitive. It's often validation errors popping up that didn't make sense. Also, the chart of accounts itself was a very long chart of accounts. So when it came to reporting, it was difficult to pull summary level reports together, and as part of that, there was often coding errors with transactions going to the wrong place. And with the system not being intuitive, with the menu options and where to find information, that in combination with trying to develop reports, so just basic reports or changing existing reports, often I had to go back to the existing consultancy firm to get their developers on to add fields or add columns to existing reports, which just took time and money. And in this day and age, you would expect to be able to do that yourself. That existing tool wasn't particularly consolidation friendly either. So, with offshore businesses in the US and Australia, we need to be able to combine information quickly and bring it together. And it was more of a manual process there. So I kind of was faced with this decision of, do I invest money getting this existing system up to speed and functioning as well as it could, or divert that time and effort into a system that I knew could do the job in a more intuitive way. So with the company ramping up its growth plans and its strategy, so it's in a growth phase and has quite big international ambitions, I wanted to ensure that the ERP system we chose was going to scale well for the business. So I could have reverted back to something like a Xero and then added on inventory modules or cash flow forecasting modules into that, and that would have got us to a certain point, but it wouldn't really have assisted us growing on a much larger scale internationally. So with the complexity of the business and the ambition for scale, I had to choose a system that could grow with Blackhawk. So I chose NetSuite in this case because I'd previously evaluated other software solutions in a previous role and implemented NetSuite. So I kind of knew it was fit for purpose in this case.
Okay. So what challenges, though, you think Joel spoke about this earlier as well. What challenges do you think you faced, though, when you were trying to consolidate your intercompany and intercountry entities? Because I know when you had discussions with our team, that was probably one of your core objectives as the CFO. How did what did you face, or how did you sort of overcome those?
Yeah, so the challenges with the existing system, there were a couple of simple ones, but were difficult to deal with. One was just the navigation of the subsidiaries within the existing system. So you had to go into a menu settings menu and switch from one entity to another. So it was almost like each entity was a separate instance of the software solution. So it didn't feel integrated. You couldn't easily or seamlessly switch from one company to another or see the consolidated results. And the consolidation was actually done in a spreadsheet in this case. So it was set up in such a way that there was one FX rate that applied across multiple years. So it didn't really deal correctly from an accounting perspective with the foreign currency translation reserve and the use of closing rates and average rates. So it was functioning, but in a very kind of clunky way.
Okay, that's interesting, though, because you touched on the fact that you sort of had that debate or the challenge of the mind about whether you go with what you had or try to almost retrofit it. And how often do you think, leaders such as yourself are forced into that situation where you have to just go with what you have? What is your advice from that perspective? Go with what you have, or, put in that research and actually find something that really, really fits for your company and your staff?
Yeah, it's a good question. I think your finance teams aren't particularly good at asking for money. We're often asking people not to spend money. So when it comes to representing our own department, we have to find that conviction and that confidence to say, hey, I think this is the right thing to do and to invest in change and the best solution for the business. So I think it's about finding that motivation and that conviction to say, hey, this isn't good enough. What I have is not really doing the job for the business and I need to change. So it's finding that motivation initially and then doing the homework on it of going, well, what is possible with the existing system that you have? What are its benefits and what are its shortfalls? And then evaluating other solutions as well. In this case, I certainly got some pushback on the existing system that the business had used. It had been implemented not so many years ago, so there was some attachment to it still. So there was a challenge for me to justify the reasons for why I was suggesting a change. So yeah, it's about being really clear in your own mind of the reasons for why you would want to change from your existing system.
So what are some key tips or advice you would give other senior leaders or SMB owners that are facing this type of situation when they're trying to navigate challenges when it comes to technology?
Yeah, the first one I think is about just getting buy-in. So before you go do the heavy lifting on looking at alternative systems or talking with other implementation partners, is talk to your peers, talk to your fellow colleagues in your management team, get CEO sponsorship to it, and even discuss at board level. So talk about what you're thinking of in terms of change or your frustrations with what there currently is, and try and get that initial feedback earlier on before you invest too much time or money or effort into a process. So once you've done that, it's really about putting a lot of effort into the business case itself. So, document those reasons in a solid business case, outline the pros and cons of an implementation, the risks and the benefits, and within that, try and preempt the kind of questions that you may get at a management or board level when it comes to approval. Throw a Q&A section into your board paper and try and answer those questions up front so you're not put on the spot.
I like what you mentioned earlier. You said about you moved between industries, and one of your ambitions was now to sort of grow within this technology field or grow technology companies. Coming or being in the finance field yourself, how do you think the role of finance leaders has actually evolved over, say, the last 5 years or a decade even, especially when it comes to making technology decisions? Where do you think they sit? At a strategic level, operational, a mixture?
Yeah, sure. I'll just cover off a couple more items in terms of tips, and then I'll come on to that question,
Okay.
Jess. So just a couple of other suggestions there is, when you are evaluating a solution you want to implement, a new ERP system, I'd recommend spending as much time evaluating your implementation partner, the people that you're going to work with and implementing that solution. So it's just as important that the solution itself, that you're putting as much time and effort into who's going to be there, those consultants that are going to work with you on that project. So when it comes to evaluating your implementation partner, ask to meet the consultants that you'll be working with on your project. Often in the pre-sales phase, you might be talking to different people, and then you get handed over to the actual people that will be working on your project. So ask to meet those people that will be working on your project, and their background and their skill set, and just make sure it's a good fit for you culturally as well as their technical capability. And just thirdly, when implementing a new system, it's the best time to look at automation within your finance function or just business processes generally. So it's the best opportunity ever to look at streamlining your processes. So within our go live project at Blackhawk, we had a vision to go paperless within the finance function. So we brought in AP automation solution to basically scan supplier invoices and automatic workflows for invoice approval and things like that. So try and think broadly when you're looking at implementing a new system in terms of how you can use modern day automation to take away manual processes. But just flying onto your question about how to, the change in the finance function, I guess, from what it has been in years gone by. So I think there's a shift towards reducing time spent on processing transactions or manipulating data within spreadsheets, which historically has taken a lot of time for finance teams, just getting data into the right shape and the right format so it can be shared, and that can bog a finance team down. So I think there's a shift now in terms of using more current technology and solutions to automate as much as possible on that, on the transaction processing side, as well as the information visualization side and data analytics, so that the finance function just can spend more time in terms of driving strategy within the business, help with optimizing, say, pricing structures for software and for services, assisting in things like contract negotiations with potential prospects. But yeah, just overall getting more time to connect with other departments within the business and connect the dots and help drive strategy and decision making, and using that data to help drive good decision making.
Do you feel finance leaders are taking more ownership of technology, sort of making sure that technology is one of their strategic imperatives as well?
Yeah, I think so for sure. I think it's almost a given these days that finance leaders just it's part of their remit to look at their systems first and foremost and just make sure they're working for their finance department and for the business. If they're not, it can bog that team down and just limit the amount of time they could be spending on much more value-added things.
Awesome. Well, Tara, thank you. It's been amazing to chat with you. I'm going to hand over to Joe, who's going to open up the floor to see if anyone's got any questions for you.
Thank you.
Yeah, great. Thank you. I'm just going to go ahead and share my screen again. So we will just open up the floor to Jared for any questions and answers. While we're doing that, there's a couple of really key points that you made there, Jared, and I think that the ability to get some of your time back so that you're not sitting in the weeds, I suppose, sort of three out of every 4 weeks of every month, just trying to get data together and get something that you can report on back to the board. What's probably one of the key things that you've been able to do since you've put in NetSuite that you probably wouldn't have had time to do before, that's added the most value back to your business, would you say?
Yeah, good question. We've only just gone live actually now, maybe within the last month, so it's pretty fresh in this instance. But I, having done a previous NetSuite implementation, so I can speak on behalf of that too. But really, particularly with multinational organisations, it's really just the speed by which you can produce consolidated results at kind of a click of a button and be able to shift between entities and report information and slice and dice it quite readily, and also, you know, manipulate existing reports in a seamless way so you can get the data you want. So it's like, for me, it's just about trying to get out of Excel as much as you possibly can, and not get bogged down with, you know, too many pivot tables and links and VLOOKUPs and stuff like that, and try and get the system to do the heavy lifting for you.
Yeah, absolutely. Thanks for that. It's one of those things. I don't think Excel's going anywhere anytime soon, but obviously the more that we can reduce our reliance on it and make sure that the data that we're looking at is accurate and that we can, you know, hang our hat on that data when we're presenting it to people, the better off we are, I think. So thank you very much for taking the time to join us today. I just got an audience question. Has the audio started? I'm just assuming that everyone else can still hear me. Is that correct?
Yes.
I can hear you, Joel. Yep.
Great. Yeah, so I think the audio is working. So we will continue on. I don't think we've got any other questions at the moment. We will actually just jump into the NetSuite demo now, just in the interest of time. Obviously, we've got, we want to try to respect everyone's time today. So without any further ado, we will jump into the NetSuite demonstration. If there's any further questions, please make sure that you put them in chat as we go. Okay, let's start at the beginning. As you can see, we're at the login page right here. NetSuite is an entirely web-based application which can be accessed from any internet-enabled device with a supported web browser. I'll enter my username and password and click Login, and it will be transported into the application. Let's wait a moment for all the dashboards to update and load from real-time data. NetSuite also supports multi-factor authentication, which we enable by default for our clients. Depending on your organizational security policies, this two-factor authentication can be quite aggressive, requiring a two-factor challenge every time you log in, or it may remember a specific trusted web browser for a longer time. It could be daily, weekly, monthly, etc. So as you can see right here, we have our dashboard. I've currently logged in as the Chief Executive Officer, Adam Pearce, as you can see up the top here. NetSuite is a role-based application that gives you the ability to have individual named users, and then you can assign specific roles to those users, and those roles are made up of permissions, so permissions to access specific data, whether that be view data, edit data, delete data, etc. And those roles also come with specific dashboards. So in the case of the Chief Executive Officer here, I have elements on my dashboard which are relevant to myself. So I have a navigation portlet here, which allows me to quickly access specific reports such as customer lifetime value, a revenue recognition forecast, billing and revenue summaries, etc. I've got key performance indicators for specific metrics that have been pre-configured for my role in this dashboard, so I can see sales and how they're trending. I can see expenses, revenue, operating cash flow, etc. And these can be customized and updated to reflect whatever it is that you specifically want to see in the application. So as you can see, I have a reminders portlet up here as well. This reminders portlet will bring to my attention any information that I specifically want to know from the system, information that I want brought to my attention. In this case, we've just got a couple of portlets set up here. Invoices overdue, item fulfillment lookup. I can go ahead and I can add all kinds of different reminders to here, just to make myself aware of anything that I might need to be actioning. I've got another couple of graphs here. As you can see, I've got my quarterly review trend, so I can see the information yearly, by period, quarterly, and I can vary the way that that's displayed to me. I can also go ahead and print the chart or download it as an image. I've also got some weekly new business trend reviews here. I've got an executive financial snapshot which tells me things such as trending sales, the total number of invoices, the average deal size, cost of goods sold, etc. So information that's relevant to my role is being brought to me so I can see it quite easily. And I can go ahead and I can customize these dashboards to report on any element of the business that I'm really interested in. Something that I'll just point out here as well is we have what we call our Subsidiary Navigator. The Subsidiary Navigator element here effectively gives me the ability to see all of what I'm looking at either in a whole of company context. So if I've got parent company selected, then everything from parent company down, consolidated all the way up, this is what I'm looking at right now. I may want to just go ahead and look at it from the specific perspective of the Americas region. So if I go ahead and do that, then my entire dashboard will update and it will show me everything from the Americas region. If I want to go ahead and look at just Australia, for example, I go ahead and I click on that element of the Subsidiary Navigator and everything will update. I'm now in Australian dollars as opposed to US dollars as I would have been for the parent company. Everything I'm looking at is in Australian dollars and I'm only looking at data which is pertinent to that particular subsidiary. So in this case, even though this entity is trading in Australian dollars and this entity is trading in Singapore dollars, this entity is trading in euros. There's no data for our German entity as yet as it's just been set up. All of those core entities are consolidating back up to the parent company, and the core base currency of the parent company is US dollars. So if I want to go ahead and run a report, I want to go ahead and run something like a balance sheet. I'll see that reported from a parent company perspective in a consolidated manner. I'll see all the amounts here. If I want to go ahead and break that down into a subsidiary context, then I can just go ahead and add that to my columns. And now I get to see the amount across my entire business consolidated automatically and in real time. I can see the amount from each individual subsidiary that's contributing to the total amount of my consolidated company. So when we say NetSuite is exceptionally good for running businesses across multiple countries, across multiple currencies, and across multiple different legal entities, this is what we're talking about. We have the ability to operate in any jurisdiction, in any currency, anywhere in the world, and we can operate in the base currency in the subsidiary context that we're working in. However, when we consolidate back up to the base currency of the highest legal entity. So head back to our dashboard now. Now that we've given you a bit of a look around, a bit of a look and feel as to what the dashboard looks like and how NetSuite is laid out, I'd like to just take you through a customer journey from the beginning of a sales order, a lead to a quote to a sales order, how we will create items and revenue recognition items on that sales order, so contract and subscription items on that sales order, how we'll fulfill that order and invoice it, and how we'll apply a revenue recognition schedule to it. So we're going to start off as a salesperson. So I've switched to the salesperson role. So as you can see, we've got a different dashboard that's come up here. This is information now that's relevant to the salesperson. I won't go through it again, but as you can see, that has changed now. The top menus have changed. It's now only elements that are relevant to my role as a salesperson. So I'll assume that I've had a conversation with a prospect. So I've gone ahead and populated those fields now. So Andrew Smith from Access Software is giving me a call. He's looking for a powerful ERP platform to manage the software business and assist with some tax compliance. He came to us via the lead source of the Executive Roundtable event that we held, and his company size is 1 to 99 employees, and his revenue is between 6 to 100 million. Obviously, we can edit these factors to make them pertinent to the business and pertinent to the segregations that we utilize in our company. We can go ahead and save that lead now, and that lead is now in our system. So we're going to assume that we've been managing that lead. There's been a little bit of back and forth communication. So we'll put the title in, save the interaction, and it's time to create a opportunity. It's time to create a quote. So we have our quote record here. We're going to assume that we're going to put this particular quote on a 36-month contract. So we can see that if we put it on a 36-month contract, NetSuite has determined that the start date will be the 26th of the 8th, 22. So maybe push that out to next week. And the end date will then be automatically calculated to the 29th of the 8th, 2025. So now we have the term set. We want to go ahead and start looking at other elements of the record. So we have the renewal terms here. So the renewal terms basically talks about what the subsequent term of the contract will be once the initial contract term has expired. So in this case, it's 12 months. We can make that anything we want, but we'll just leave it at that for now. And then we can go ahead and add some elements to this quote. So I've got some basic test data in here that we can utilize for the purposes of the demo. So we've got software subscription, item A, B, C, D, etc. We have trading classes that we could incorporate, professional services. So just some items that we can use to populate this out. However, in the interest of expediency, I'm going to assume that Mark's purchased our most popular bundle, which is our enterprise bundle. So if I go ahead and add that enterprise bundle to the quote, we can see what we've done here is we have a whole bunch of elements that have automatically been added as part of that bundle item. So SaaS license A and SaaS license B, some training classes, and some professional consulting services, which are all part of the bundle, and they've been added to this item. Now, it can either inherit the contract term from here, or you may want to specify individual contract terms. So you may have the SaaS license as being only 12 months initially. Or you may decide that this particular item is 24 months. And when you do that, that will go ahead and calculate the effective dates for you. But just for the purpose of this, we'll just keep everything uniform. And we're going to assume that these trading classes are not on contracts. So we can exclude those from the renewal. So we're not going to renew the training classes, but we will renew the professional services hours that are incorporated. So we can also go ahead and set the billing terms for these. So in this case, the billing terms that we have are annual terms. The contract terms that we have are annual terms. We can also set the billing terms on the actual sales order itself, so we can determine how we're going to bill, whether or not we're going to bill the whole amount up front or whether we're going to bill annual in advance over 36 months. So we'll look at that when we get to the sales order. So we go ahead and we'll save that transaction. We have confirmation that the transaction is saved. And now we have a quote that we can email across to our customer, or we can print it out, or whatever else we want to do with it from there. The next step is to convert that into a sales order. So we go ahead and we click the sales order conversion button. So now we have the sales order record itself. So this is the order where we're actually starting to create a transaction. So a quote is just a non-billable, non-posting transaction. A sales order is where we actually start getting into the transaction level of things. So we can go ahead and we can review this. We can go ahead and look at the billing schedule now. So we can see whether it's 100% due up front or net 30 or whatever it happens to be. But this is going to be annual, 3 yearly. And we're going to build this line annual, 3 yearly as well. And for these items here, the training classes and the professional services, we're just going to bill those on standard terms. So we will put them 100% net 30 and 100% net 30 as well. So now we have all the different terms in place. We can go ahead and we can save that order. And that order is now saved in pending approval status. So that's pretty much the journey from a salesperson perspective. We've gone ahead and we've created that transaction. We've got it to the stage of pending approval, and now it's up to us to head that up the chain and get that sales order approved so we can actually go ahead and bill it. So we'll just go home. So we're going to switch across to our financial controller role. And as you can see, the dashboard's now been updated to be more pertinent to the role of the financial controller. And we're going to go ahead and look for the sales order to approve. Access Software Incorporated. Going to go ahead and just check the elements of the order to make sure everything's correct. Everything looks great. Let's go ahead and approve that. You can put quite complex approval routings into the system as well. So there can be automatic approvals for orders under a certain amount, or there can be multi-phase approval routings depending on what your approval routing process needs to be, but we can talk about that a bit later. So we're going to go ahead and we're going to do a partial fulfillment of part of this order as well. So we have some revenue to recognize. Now we don't need to fulfill the software as a service because that is already going to be fulfilled as part of our revenue arrangement. With the training classes, let's assume that we've got 2 training classes that we're going to fulfill straight away, and we're going to do 5 of the professional services hours. So now we have a bit of a fulfillment going on there. So heading back to our sales order, we now have the ability to go ahead and raise an invoice. So you'll see the feature of next bill sitting on here. What that gives us the ability to do is generate an invoice, and that invoice, NetSuite will take a look at the sales order, look at what elements are ready to be billed, and go ahead and create an invoice for them. So it knows that we are billing annually in advance for the 3-year contract for this amount of $3,120 a month over 36 months. So we're fulfilling 0.333 of that, we're fulfilling a third of that, and we're fulfilling also a percentage of the training classes that we have sold out, and also a amount of professional services consulting as well. So we go ahead and save that. And then we've got an invoice in the system now, so we'll go ahead and go back to our sales order record. And what you can see is when we go to the related records, we can see that we have an item fulfillment that's been created, there's a revenue arrangement that's been created, and there's an invoice that's been created as well. So this revenue arrangement is a non-posting transaction that records the details of the customer's performance obligations, or our performance obligations to the customer, for the purpose of revenue allocation and revenue recognition. So the advanced revenue management engine automatically creates this revenue arrangement for the predefined revenue sources that we've set up in the system, in this case such as approved sales transactions and items that attract revenue recognition schedules. And these arrangements from multiple revenue recognition sources can also be consolidated if we need to consolidate them as well. If we examine this revenue arrangement, you'll see that based on the performance obligation for each line of the sales order, it has 4 separate revenue elements. The revenue elements record the correspondence to individual lines of the revenue source, and each revenue element represents a performance obligation. And the revenue elements are attached as lines on this revenue arrangement, and if I go to examine the revenue recognition plan, you'll see that there is a revenue recognition plan. It's made up of a forecast plan and an actual plan for each of the performance obligations on this particular revenue arrangement. So the first one's being a subscription software line item. You can see that it has a start date and an end date for the term. When you invoice a subscription item, you can invoice just for the first year of this term. However, The revenue arrangement will ensure that only the appropriate amount of revenue is recognized at the appropriate time, in this case, monthly over the first year until the next invoice is raised. If we take a look at the revenue arrangement for the services that I've already fulfilled, we can see that the revenue arrangement is quite different. So the start date and end date are the same because I've already recognized that revenue. That revenue can be recognized because we've already fulfilled that part of the service obligation. So we're going to jump back home. And we're going to quickly go and take a look at some of the other roles that are in here. So if I go and have a look at the Revenue Manager role, take a while for the dashboard to load, we can see that we now have a dashboard that's been set up specifically for the Revenue Manager. So obviously your organization may not have a Revenue Manager per se, but if your organization does, or you have somebody that kind of manages this role for you, this dashboard is going to give you a really good overview of the metrics associated with your software as a service business. So it'll tell you what your total contract value is. It will tell you what your churn revenue is and what your churn rate is, and also what your renewal rate is. So all these dashboards come pre-configured in the software edition of NetSuite. It gives you some really interesting information, such as what your new annual recurring revenue is, what your upsell ARR is, what your downsell is, your churn revenue, your churn rate, your CAC, your lifetime value of your customer, and your renewal rate and your average sale price. So some really nice metrics in there that you can really utilize quite effectively, as well as also revenue recognition reports such as your revenue forecast and your planned versus recognized and your deferred revenue waterfall. So if we look at the revenue recognition forecast, we can see for all the different companies that we have, what the revenue arrangements and what those revenue forecasts are. We'll have a look at our plan versus forecast detail. We can take a look per organization from a revenue recognition perspective, what is planned and what is forecasted. And also, we can take a look at our deferred revenue waterfall as well. There's plenty of other reports in there that you can see that are quite useful. And finally, I just want to quickly touch on the Renewals Manager role. So we're looking at the Renewals Manager dashboard here as well. I think that final element of subscription service businesses is that you need to ensure that you're renewing your customers. So having a proactive relationship with them, understanding what your renewals pipeline looks like, and ensuring that that's being proactively managed is an important part of that. So NetSuite has a full CRM, so you can record all of the interactions and transactions with your customer. Again, you may be doing that in your current CRM, and that's perfectly okay as well. But this dashboard will also give you the ability to see what renewals are coming up, and also the ability to pop into your contract renewal view as well and see the individual contracts which are on renewal that either have or haven't been actioned. So the green elements are sales orders that have been actioned, and the red elements are sales orders that haven't been actioned, so or haven't actually been planned. So if we go up to have a look at those transactions, we can see the ones that have been billed. So we can see that they're all good. However, there may be some that haven't been actioned, so we can go and take a look at those and see that First Express has not yet renewed. Their target date was the 1st of the 8th. Their contract item start date was the 1st of the 8th, 20, and it expired in the 31st of the 7th, 21. We've not renewed them, and as a result of that, their contract item state has expired. So you have the ability to manage your renewals process inside NetSuite, an application that's actually been built for managing contract renewals. So in the interest of time, I think I will stop us there. Please ensure that if you do have any questions, place them in the chat if you haven't already. and I'm going to wrap the demo up there. Again, thank you for your time and attention during this demo process. It is obviously a very fast and furious high-level overview. If there's any elements there that you'd like us to drill down some more on, would be delighted to do that on a one-on-one session with you. So please don't hesitate to reach out to us in the chat or contact us via email or via phone, and we will absolutely be able to have a chat with you about any of these other elements, explain it in more detail, or just go through it a little bit slower for you. So with that aside, I'm going to wrap the demo up now and we'll continue on. So thanks for sitting through that. If there's any elements of that demonstration that resonated with you, or if there's anything that you would like to drill down on a little bit more, please don't hesitate to get in contact with us, put some details in the chat or reach out to us, and we'll be more than happy to follow that up for you as well. So really appreciate your time today. Thanks for joining us. Just a few things to end off. The recording of this webinar will be sent through to everybody who registered within the next week. So please look out for that in your inbox. If you'd like to know more about Fusion 5, please head across to our website at fusion5.com.au and fusion5.co.nz. And don't forget to follow us on LinkedIn at Fusion5 as well. Thanks again to all the panelists today. Big thank you to Gerald for joining us today. And have a great day ahead. Thanks, everyone.